What's up, guys? This is Thurston, and this is my journey to success. So, the first thing I want to do is just explain to you guys what my weekly system looks like what I'm doing on a weekly basis. Okay, just so that you can understand when I'm coming and I'm doing this content, what I'm going to be doing. Okay, so I work on my trading, then I work on ZAYOH. Yes, I work on my trading, I work on ZAYOH. I'm working out. I'm just having a conversation. Okay? So those are like the 4 pillars of my storyline. So right now, what we're going to do is work on some trading, because what I need to achieve is a consistent income stream. And how I'm going to achieve that is through trading. Now, the reason why I'm saying all of this is so that you can understand in what kind of a mindset I am in. Because with trading, you have a different mindset than when you would with being an entrepreneur. Okay? And those two mindsets work differently. So that's why I have to explain to you what I'm doing when I'm doing it. Okay? So that you understand what my mindset is at the moment. Because you can't approach trading with the same mindset as an entrepreneur. So my ability to switch from being a trader to thinking about creativity is completely different. When I'm trading, my mindset should be more like a mountain lion, waiting for the right opportunity, being patient, strategizing around patience, not the ability to attack on a fast pace. No. When I'm approaching trading, my mindset needs to be sharp. I need to apply myself exactly. And then when I'm busy with ZAYOH, I can just have my mind run wild, basically, fill my mind with ideas, think about different ideas at the same time, but with trading, I can't apply that same mindset. It needs to be different, okay? So that's why it's important that I explain that part to you, so that you know that, okay, right now when he's doing trading, he's focused on the main goal, focused on getting, on applying himself, And then when I'm doing ZAYOH, my mind is all over. I'm thinking this, I'm thinking that, you see? So it's 2 different mindsets. And that's why I needed to explain what it is that I'm going to, what it is, how my system looks like, okay? So let's get straight to the point and jump into the trading process of my journey. Okay, so today we're just gonna look at one chart. I want to improve the experience of my content, and I will do that over time. I know. Okay, just be patient with me. So, okay, let me sit like this. I'm gonna be in the background explaining so that you can see what I'm doing instead of me just explaining and you looking at me and stuff. Okay, so good. Okay, so I hope you can hear me. I'm going to analyze two charts, the dollar index and gold. Okay, so I hope you can hear me. Let's begin. Let us begin. I'm gonna remove these so that you can see how I got to this point. Okay, let's remove that. Let's remove that. Okay. So if we just zoom out, okay, this is the 4-hour chart, but I'm zooming it out. This is the dollar index. We're gonna move that there so that we okay, you can see. Okay, yes, there we go. Okay, so this is the dollar index. Okay, and what we can see with the dollar index is that we are on a bullish phase. Okay, we are trending bullish, so market is going up. We can obviously see that, and if you apply something like a trend line, you can see that right around there price always just bounces off the specific area where it touches the trend line. So what we can do is apply this tool that helps us identify those specific areas. Like if we apply a channel to this, right? Let me just remove this. I hope you can see the channel. It's going up. Okay, so if we apply a channel to this, we can see at the specific areas price seems to bounce. Okay, let me just do this so you can see. Boom, boom, boom. So somewhere there and then boom, something like that, right? So what you have to understand is that we're not trying to predict the way, we are basically trying to predict where price wants to go. Okay, but the most important thing for us to do is to just follow what price is doing. Okay, so if we zoom in, okay, if we zoom in, technically, because we never came back to this point, wait, before I say that, technically because we never, like, if you look at this and you see that the structure was broken through, you could easily use this as a break of structure. Okay, easily, you could easily do that. Okay, because here what I see is when we had this retracement, we had about 3 black candles pushing down. Okay, but we also can identify that as liquidity, right? That's more like a continuation, like price is showing you like we are strongly pushing up. Okay, in order for me to say that this is a valid pullback, price needs to at least reach that 50% discount level. Discount the premium level. I think it's premium. When you buy, you buy discount. When you sell premium. Okay, I think so, yeah. So we need to at least reach this 50% level. Then that to me is a valid pullback. It doesn't always happen that way. Doesn't always happen that way. So if we don't reach that 50% level, we at least want to see liquidity taken. Okay, so price has this tendency of when okay. Oh, I see. This is also a break of structure right there. The reason why I say that is, yes, we didn't come back to that. We actually did just right around there, just there. But what we did do is we took liquidity, right? So price has this tendency of, after a break of structure, it generates its own liquidity. If it doesn't generate its own liquidity, it takes the low's liquidity. So all of these structures can be identified as liquidity, right? But identifying which liquidity is the most important, that's basically what's going to give you a lead. Okay, as we can see, we took liquidity, we filled this imbalance, right? We reached. So all of this, everything I'm doing now is basically to give me an edge into the market. So we didn't reach this order block, but the order block is valid, and there's no liquidity, but there's imbalance. So what does price do? It generates its own liquidity. We come, we create liquidity, we take the high, we take the low, we take this low, we generate a little more liquidity, we take the low here again. We don't take this high. We don't come up and take this high and then push back. No, we don't do that. We take this high, we take the low, this low, we generate more liquidity by taking this low, and then we rally up. Okay, so how we going to identify that, okay, this liquidity is going to be taken is by not having a high taken, an external high liquidity being taken out. This external high was not taken out right after this low was taken. Instead, price took this low first and then pushed lower and then changing character and then pushing up. So I want you to see that happening every time we break structure. So we come up, we break the high, obviously, we break this high, right? We push down. Instead of breaking this high, we take this low, and then we really up. Can you see that happening? Okay, just to show you. Okay, so here we can see exactly what I was saying when I was saying that instead of us taking we take this high, right? We come down, we take these two lows, we sweep these two lows, right? We push up. So instead of us taking this low first, so instead of this happening, so we take this high, we take this high, and then we take these two lows. After that high, we take these two lows, and after that we don't take this low immediately. What do? We take this, we take that, and then you can see that we take that because we don't break and close above. We just sweep liquidity, then we take this low, all these lows, and then we take those lows, then we push up. You know, like, it's just about liquidity. You can see that this is a channel. It's actually equal highs and equal lows. You can see that, right? Let me just make this darker. colors darker, and we make the lines. We make these lines, we make it straight lines. Yes, straight lines, just so you can see what I'm talking about. So this is equal highs and equal lows. This is when we don't want to trade the market. Equal highs, equal lows. We come here and then we take this low. These we take all this low. Okay, I know it's a bit messy now. Okay, let me try and make this a little like nice on the eye. Oop. Red. I think red works for everything. Like I identify red as liquidity. Okay, so from here to here. Okay, and then let me just do this. Yes, can you see that? This is equal highs and equal lows. Okay, this is what we call consolidation. Okay, even though we took this high first before taking this low, these lows right here, we still consolidating, you see. And then because how we know that we're not looking for a sell just because we broke here, right? This is the high, this is all liquidity. I'm gonna put that there. That's all liquidity. Okay, how we know that how we know that this is not a change of character is because in the 4 hour we are still bullish. So we're looking for buys. We're not looking for sells, we're looking for buys. So we are still bullish, and then all of that, you know. So we are trading in the direction of the higher time frame, which is bullish. That is a ranging period in the market, and then we sweep the low before we push up. Okay, so we sweep that low, we push up. Okay, so there's a break of structure. That was just for the sake of explaining. Break of structure, we push up. What happens after that? We sweep liquidity, we create liquidity, we sweep that liquidity, and then if we go to the 15 minutes, you'll see that now here we have a change of character, and that's actually how I know that this market is pushing up. Okay, so this is a sweep of liquidity, and then what is this? A change of character. So it's a eye chalk, a change of character, and then he does all of this is just to retrace back. So if we take the fib tool from here until here, right, all of this happens, all of this, right? So here until there, we can mark out at this level of OTE that we want to enter into this trade. As you can see, when we got here, right, we can place limit orders. We place limit orders, right, and we say, okay, maybe I'll accept this after we take this yeah, I'll accept it after that. And then when we get here, we in 15 minutes, we see that this is a break of structure downwards. This is a break of structure. This is confirmation now, break of structure, and then we change character there. right? This is why it's important to stay like patient and observe what the market is doing. This is at the level of OTE. We have our limit orders here. So as soon as market comes in, we go into the trade, then we wait patiently. We see a break of structure, we see a retracement, we see a break of structure, we see a change of character. We mark from here to here. At the level of OTE, we take more trades. This is so with that we can then take our limit orders SLs and put it below here, put this below here and target these highs. And then we keep doing the same thing after that. Okay, so this is just yes, so I basically explained to you now how I would take the trades, but that's not what I wanted to do. Basically I just wanted to show you that on the dollar we are going up, right? And this for me is not a break of structure. I can't accept it as a break of structure because we only now recently took these lows as liquidity. We only recently took those lows as liquidity, and I can identify the daily order block here, and then this is the low that should not be. This is the protected low. Okay, this is the protected low. So from here we can also identify imbalance here, right? And then we can also identify OTE at the level of imbalance. So this is a pretty good level for me. Okay, so now we have these two guiding us until where we would like price to come, so we can use this as liquidity. If price comes here and then we can expect a push up, right, at the 4 hour. I can't accept this as a break of structure, because if I do, you can accept it as a break of structure. In fact, you can accept this as a break of structure in the lower timeline. So 30 minute, this is an hour, but 30 minute is good as well. So 30 minute is where we identify internal structure. So this is 30 minute, and then you can identify this as a change of character now in the 30 minute. That's how we know that price is now retracing towards this level. Okay, you can take trades from here. So this is what I want to start achieving, taking 30-minute trades. This is a protected high. We don't expect price from here. We don't expect price to break this high, or if it does, only grab liquidity. That's basically what we're saying now. So we accept this as a change of character because it broke and closed below. So from here to here, you can expect price to at least come to this level of OTE before pushing down. Okay, so that's just the dollar index. Let's move on to gold. I know I over-explained now the dollar index, but that's basically how we're taking our trades. Okay, I'm gonna just post this video because I feel like I over-explained the dollar index. The dollar index is just for directional purposes, just to show us where the market is now, so what we can expect in other on the other markets. So this is gold. Okay, yes, remove this. And with gold we can see that we are pushing lower, we are pushing lower, right? We've broken the structure here, we've broken the structure here. So what do we expect now? We expect the retracement somewhere here, at least somewhere here, something like that, right? Maybe this is the lowest point for gold, but we don't predict what the lowest point is. We only try to understand where price wants to go from where it is now. Okay, so what can we see on the 4-hour time frame on gold? Okay, so exactly what I told you happens on the dollar index. If we see this channel here, we can see that between these two channels, right, price has a tendency of bouncing. Can we see that? Price has this tendency of bouncing from these points, from this point to this point to that point, come down to this point, to this point, to that point, to this point. Can you see that? We're bouncing on these points. So that gives us a guideline. Like, it gives us a guideline, okay? I'm not saying it's supposed to be perfect. I'm saying that we're using this as a guideline. So if we use this wave, right? If we use this wave, can you see that? If we use this wave, so I'm gonna just remove that. If we use that wave and we look at what price does before it pushes down, because this is a bearish trend, we can identify that we grab liquidity and then push down. We grab the highs and then push down. We grab the highs and then push down. So what does that tell us? That tells us, okay, we're identifying highs. So if we identify this high as liquidity, we can see that we already took this high, right? We're pushing up. So we can identify this high as the next liquidity. So what does that tell us? That tells us that, like, we can expect something like this before the push down, right? That's the expectation. That's what we can expect. And we can expect that we push higher, because now we already broke this low. We already broke structure, like external structure, making this the protected high. And the way we're gonna identify that we are having a retracement is by a break of this high, right? So we know that this high must not be violated. And then if we look at where we are right now, if we go to the 30 minutes, this is where I want to start trading from. So if we apply that same knowledge, that after a break of structure we identify a grab of liquidity, then we can expect that push up. We'll see that when I come. If we just look at price from where it is, we can identify a break of structure, right? A internal break of structure, right? After that internal break of structure, what do we have? We have liquidity over here. What does price do? We grab liquidity, we push down. No. Sorry. Okay, so this is where I want to start trading at. So we grab liquidity, we push down, we reach this last order block that is responsible for this break of structure. So the small structure here is responsible for this push down, and then we break structure right there, and this is the internal break. Then what do we expect? So we expected price to at least take these highs, but it did not. The only thing it did was basically come to this order block because it's very large. So how we can identify order blocks is, if we in a 30-minute, we just go to the 1 hour, and then we saying basically like this is the last order block. So I would say I would take this trade from this order block, right? But it's not always valid. Like here we would have expected it to come at least until here and also clean up this imbalance here, right? But the only thing we did was take these highs and move down, right? So we can apply that same knowledge now. Say we're following what the price is doing. We're not just doing our own thing. We're following. We say, okay, this is the high that should not be broken, protected high, but between this high and this low, where can we expect price to come to? We can at least expect price to take this high as liquidity and then move down, but it did not do that. Instead, it just pushed lower, grabbing the sell side liquidity and breaking lower. So what then? What does that tell us then? That at least tells us now that we expecting this high to be taken at least, right? This high to be taken at least, because it's the high after the break of structure, and at least this high as well. So after the break of structure, what do? We mark out liquidity, this high to be taken. And what did price do? We took that high as well as taking this high. Now this is the protected high. We don't take that protected high. See, we don't break past there, and we have some liquidity. We're at least expecting what? Price to grab all this liquidity before pushing down. And then what did price do? We pushed lower, grabbing liquidity, right? So we could have taken this trade from here to here, because it all our how can I say, all our points of interests have been marked off, right? We took this high, we took this high, we took that high. Also, if we come up here to the 1 hour, we can identify this order block, so we can mark out this order block, and if we take Fibonacci from here to this low, we can see that obviously OTE was taken out. So we mark all of this. We mark from here to here after this break. We mark from here to there. We say, okay, this is OTE, right, which has been taken out. This is the high we expect to be taken out. So this high comes, takes out that high. This is imbalance, right, at the level of OTE, and this is the last order block. So if it broke here and closed here, this was going to be our change of character. So we take this, we come to this level, we take this last high, we take liquidity, we push down, we take this low liquidity, And then what do? We form this kind of reversal structure. It's like it's a so basically it's like, okay, so we come down, right? We break low, we break this low, then we come back up. Now instead of breaking this low, all we do is take liquidity, and we actually don't just have to take liquidity, we can also just break this high, just low I mean. But we, instead of breaking, we take liquidity, then we push higher, we change character, right? We change character, we push lower, and we go up. So basically it's like we take this low, liquidity, we break this high now, we change structure, and then we continue. You understand? I'm also trying to get around this, right? I'm also trying to get there. But this is, it's consistent throughout the market, this like structure, this pattern. So we mark this as like break of structure. And as you can see, like break structure, retest, change, grab liquidity, then change the structure, and then continue. It's like it happens in the market. So we come down, we break structure, we retest, we grab this liquidity, we basically come back, and instead of breaking this low, we just like break now this high and this high, and we continue. So we can use this high as the change of character, and this is liquidity. Just want to show you, can you see it? It's like continuing, grab liquidity, push up. Instead of breaking lower, we push up, we break this high, and we change character now, and then we continue up. Okay, so we've changed character, we push up, we continue, and we can now, like, I would use this as liquidity. I won't lie, I would literally use this as liquidity, because that's how I know the market to move. It's like, yes, we can use this as a break of structure and see what happens when price gets to this area, to this point of interest here, and we can identify this as liquidity, follow those same guidelines, and then, but I would still accept this as like the low that should not be broken. It should not be violated, this low, in the 30-minute. So even though I expect price to, because we did have a continuation here, no, like let's say continuation, we did have a continuation, so that can also help me like to say that, okay, this is actually the high I want us to take. So from here I would do this. So I would do this. When price gets here, I'll go to the 5-minute and wait for the change of character to happen. So as you can see, it happened again. This was a change of character. This was a breaker structure, right? And then what happened? It took liquidity. We broke this low. Then we break here, changing character, right? So as you can see, this is that same pattern. Here's it again. The same pattern that I was just explaining to you is we continue, right? We take liquidity, we push up, and then what do? We grab liquidity here, we push low, we break structure here, we change character here. Now what am I expecting? Something like this. So I would say when we get here, whatever happens, something like this, I'm expecting. In order for me to say, okay, this is yeah, that's what I'm expecting. So now I would say somewhere here, I'll expect a buy. If we break lower here, then I know that we've changed our direction, which I doubt. So something like this. Yeah. And we see this is liquidity. We have all this imbalance here. And let's go to the 1 hour. Let's identify that order block. So technically it's this one here. Yes. Okay. So that's one chart. So from here I'm expecting a buy. Okay. So with that now, I need to achieve profitability in trading so that I can be able to move forward and not have this financial burden on me. Okay, so this is very important to me. I've spent a lot of time learning how to do this. I'm not profitable yet, but I'm getting there, you know. Like I can see myself becoming profitable. Okay, so this is a very important area and section into me becoming successful. I need to get this. Okay, and I'm gonna stop at nothing to get this. So the next thing I'm gonna do now is I'm gonna analyze the other two charts, and then from there I'm gonna see where I would take the trade from, and then I would take the trade, follow the market, take the trade, but not trading real money, just taking the trade on the charts and see if I'm correct or if I'm incorrect, and where do I still need to learn. Yeah, where do I still need to learn? Where do I still need to improve? Okay, because there's a reason why I'm not profitable yet. I'm not profitable because I'm still doing something wrong, and I'm trying to figure that out. So if anyone is out there and they're watching this and they say, okay, I can see where it's going wrong. If you took the time out to watch this and you can tell me where I'm going wrong, please share, because I need this. I really need this. Okay, I really need this in order to achieve success to my scale, to what I want. So thank you for watching. Please stay tuned to more. I'm gonna give more rawness. This is who I am. This is what I'm about. This is me building ZAYOH. This is for the ambitious. This is for those building themselves. I am loving ZAYOH through you, with you. You seeing my flaws. You seeing who. This is not a pretending. This is who I am. What you see is what you get. Okay, this is who I am. I'm not pretending. This is how I look. This is how I speak. This is what I know. I'm willing to learn more. I'm willing to fail more. So yeah, um, at the end of the day, you decide if you want to support someone like me, you know. So for those out there, for that person out there watching this, being in the same space as I am in, either with trading, either with the brand, with life, with everything, you can relate to me, I can relate to you. Okay, thank you for your time.